Hi there. Welcome to the closing bell. I'm doing this on the 2nd of June, and well, the markets are still in the same spot, amazingly. So I'm going to focus on something else today. Was searching around for what stock I could bring you, and well, I've settled on Spotify. So it's an international stock. I don't usually look at them, but every now and again, I mean, why not? You might have access to being able to buy something like this. And I quite like the setup. I really like the product. I've been a Spotify user for a long time, and I think down the track, being one of the leading music apps, um, surely it's got to be a license to print money. Um, Big competition, always risk around, but I'm just thinking, what could this company be in 5, 10 years' time? And the setup is interesting to me because we have had a bit of a washout in the price of the stock since its listing. And I love looking for false breaks, as you probably know, of major levels. The theory on that being you often have stop losses below major lows. So this is the monthly chart of Spotify going back to when it listed. Bit of excitement in 2021 when we had the big rally running from, $100 up to 360. Huge move. And look at this. It's been a real washout, hasn't it? Bang. All the way to the low. And this is where I was saying often the stop losses that people place are below major lows. So a lot of the buying going on in here, plenty of people would have been sucked out of their position when the price sold off for months and months down to this level. And then I like to see the reversal after that clear out occurs. And you can see a nice big strong monthly buy pivot. That was the actual moment to probably jump on. But I've just been watching it since. So we have the old low there. And I'm looking again at the range. That's why I've got the range set up for you with the point of control around $244. The buy zone of that range in this area, and the sell zone of that range up there. So the buy zone, pretty much where it is right now, is in that sort of area, even though we've had that big false break, which has cleared out a lot of positions. So you're still buying it at a pretty good level compared to the range of prices that this thing has traded at. And we're looking at the long-term trends. You can see the long-term trends, 10-month exponential crossing there just before it really blasted off to the higher. We have the long-term trend finally shifting down there. That's when it really collapsed. And we're just on the edge of that long-term trend shifting back to the upside. We're a little late to the party. It has run from about 120 to 150 over this last few months, but I've just been keeping an eye on it myself, wondering when it was time to jump in. And with this sort of thing, I think you're looking at it as an investment. You're not just dumping the stock quickly, but I guess if it does break back below those lows, you're getting pretty nervous, aren't you? So that's sort of how you're looking at the position. But I'd be a buyer on weakness. And I'd really want to allow even a false break of that low. So give it a bit of room. Maybe it's a $50 stop loss to make sure that you can survive some pretty serious volatility. So you do have to take it on, buying it at 150. But really you'd be picking it up on weakness, and you've really got to target back to that point of control, which is $244. So if you could make that move and get a good win, you might be taking part profit on it and adjusting your stop loss to a break-even level. So, if you're buying it at 150, let's say selling some at 250, you've made $100. So if you sold a third of your position, your stop loss would be $50 below. So if you bought it at 150, sold a third at 250, your break-even stop loss from that point on would be $100. So that's pretty near the low of the whole range. If you could set yourself up in a position where you were long Spotify at $100, which is right near the low of the range, and then see what they can do over the next, 10, 20 years, that's not a bad little setup, I don't think. So that's what I'm looking at today and thinking about for you. I think it's not a bad little setup, the fact that it has had that nice false break and is starting to trend back to the upside now. So hopefully a few of you can get onto something like that. Bit of a different one for me today. But, a few weeks ago, I had a chat with you about a stock, Megaport. Often I'm talking about the indices. And I had a chat with you when it was still just turning up after some good news, and told you that one might be worth having a look at. And look at it, up at $7.13 now. If you'd bought that just a month ago, you'd be up 20% on that, which isn't bad. And I'd love to hear from you if you did take that trade that I sent out to you. You can write into us if you like, or leave a comment below the YouTube video. You could probably access the YouTube video on the bottom right of your screen, I'm guessing, to go to the actual YouTube video. Maybe not. But hopefully, yeah, that chat a few weeks ago was good for a few of you. I do give a stock idea every now and again when something really jumps out at me. I don't want to just pour out, one after the other every week, because that is impossible, for one, to find great stocks to buy. It's a lot of hard work. So I try to focus on the indices more, to give you a sense of that rather than giving you stock ideas in this free video. But when they come along, not too bad. I gave you Newcrest as well, below $20. That's around 26, 27. So if you're not a member of one of my services, why not? You should be signing up if you've been getting on a few of these. Now, if I'm just moving on to the markets where they are, just to give you a bit of an overview. And this is the S&P 500, which we know very well. And I've still just got the lines in the sand. That's why I didn't want to focus on it too much today. That 43.50 area. Above there, I am going to change my tune a little bit. But as long as it remains below there, I think there still is a risk this thing can roll over. Although it's, up at the highs at the moment, it's very difficult, isn't it? It'll need to break back below 4,200. That can happen in one night. The next level is those lows there around, 40.70 or something, probably. So that'll be the first problem area. If it breaks through there, and that should push it to the 200-day moving average, which is the next. So you sort of got 1, 2 on the 200-day. And then a big one is that level around 3,800. Below there is lights out. So it's just a tough old market, the fact that it's in between these really key areas. And I've got less of a view where it is right now. Don't want to be sticking my neck out too far. I think the risk is to the downside due to everything that's going on in the world. I would expect it should go down. But the AI thing is really holding things up. The Russell 2000 small caps are pretty weak. Bond yields still pretty high. But everyone now starting to talk about whether the Fed's finished their tightening. And, that might be enough to inspire some more short covering. So we wait and we watch with those key levels. And, yeah, that's just how it is at the moment. And it's taken forever. And everyone's bored to the death of markets, I'm sure. but it'll get going again soon. So that's probably it for today. Spotify is my idea for the week, and let's see whether this market can actually move further than 1% at some point. All right, cheers.